Hey everyone, it's Mike from Orderflows, and this is a special video on trading the overnight session with Orderflow. One of the questions I get frequently from people is, I don't want to say they're new to trading, but they might be a bit new to Orderflow and trading on a shorter time frame as opposed to swing trading or trading, on a daily chart, because Orderflow is best used intraday. And one of the questions that I get is, hey, I've got a full-time job and I can't watch the markets during the day. What other options do I got? Well, there's two options. One, you can trade basically the night session, trade the US products at night, or obviously you can trade the European or the Asian markets during that time. But really what I'm going to talk about in this presentation is the US products, the products that trade on the CME. And there are decent trading opportunities, and I want to get into that. So before I begin, a brief disclaimer: this presentation is for educational and informational purposes only, should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Full disclosure, I do sell a software, the Orderflows Trader software, which you can go to orderflows.com and find out more about. And that's the tool that I use in my trading, and that's the tool that I use in these video presentations. So what do I mean by the overnight session? Well, I mean overnight Chicago time. In short, basically the reopen of CME at 5 p.m. Chicago time until about 6 a.m. Chicago time, which is 7 a.m. New York time. And for me, that's sort of when the U.S. session really begins. Now, this is a infographic I got from the CME groups. It's a little bit dated. It's January 2016, so it's about 2 years old. But honestly, I don't think it's really changed that much. But just gives you an idea of sort of the type of volume that you see at overnight. And this is based on the Asian day, basically 8 a.m. to 8 p.m. Singapore time, which, depending on daylight savings, is basically 7 p.m. Chicago time till about 7 a.m. Chicago time. So basically, the European session and most of the Asian session. So, euro dollars, this is the short-term interest rate. This is not Eurocurrency futures. That's why you don't trade 2.5-3 million contracts in the Eurocurrency, but this is the euro dollar. Most people don't really trade this unless it's a short-term interest rate, and it's traded mainly by banks and hedge funds. But contracts that most retail traders trade: Emini S&Ps, 10-year notes, crude oil, 5s, gold, Aussie dollars to a certain extent. Most people don't really trade copper. The one thing I wish I had on here was the Eurocurrency, but probably didn't make the list because at that time the volume, relative to the day session, isn't as great. But I'd be curious to know what it is. I wish they would update this and make it available to people. Actually, a broker sent me this a couple years ago. That's why I have it. But it's interesting. Emini S&Ps 13%. You think, 13%, it's not that much. But when a contract trades, 2 million, 3 million contracts, 13% is a lot. Back in 2016, when the average daily volume was 2.4 million, 13% is 300,000. For certain contracts, I'll say for a lot of contracts, they'd be happy to trade that amount during the normal day session. Crude oil, 150,000. Over 160,000 during that evening session until 7 a.m. New York time. That's a lot. You can see here gold whole session 193,000 Aussie dollars. About 50% of its volume happens during the evening session. That's a lot. It's 57,000 contracts on average. Copper, 24,000. But, these are solid numbers. So, there is activity at night. It's not like they're trading, 5,000 contracts or anything like that back in the old days. Now, the reason why I wanted to make this video and just, sort of say educate you guys, but I used to work these shifts before, basically since the 1990s, from 1995 or 96 when I left the CME floor. And I went to the upstairs trading desk until, well, when I was in Singapore, I worked Singapore day hours, which is obviously the night session. But for, gosh, not my entire career, but, for a very good portion of my trading career, definitely, from the 90s up until 2016, thereabouts, these are, or 2013 when I left Morgan, 15 years at least working those hours. So I know the type of opportunities, I know the liquidity that's there, and there's great trading opportunities. And, if you sort of discount it thinking the volume is not that good, you're not going to be interested in it, think again, honestly, think again. Now, when, you're looking at these markets, okay, I just want to, just one of the things that I think you got to keep in mind is the type of chart that you're going to look at. And people that know me know I like to use range-based charts, but I also like to look at minute-based charts. But minute-based charts in the overnight session sometimes don't give you a good handle on what's really going on. Whereas a range-based chart, it's not time-dependent the way a minute-based chart is. Range-based chart is based on price movement rather than time movement. So it's not like hey, it's 6 o'clock and I got to form a new bar just because it turned 6 o'clock. No, a range-based chart will form a new bar when, a new high or low is made based on, the sort of the time, the price range that you're using. Like in this case, Eurocurrency, I like 8 range charts. I like 8 range charts for like Eurocurrency, crude oil, S&Ps, not so much. I prefer like a 4 or 5 range chart. Bonds, 10s, 5s. I like 4 range charts, bunds, 4 range charts. Interest rates, I prefer 4 range charts, and same with the grains, 4 range charts as well. But Eurocurrency, since there's quite a bit of volatility, if you're looking at a 4 range chart and the market's moving very quick, you're going to get trading opportunities, but by the time you get in, the market's already made a decent move that you're going to lose out on. I don't know. I just prefer an 8 range chart on Eurocurrency. I used to use 10, but 8 range is good enough for me. Now, the thing with a contract like, say, the Eurocurrency is you're gonna get more volume when the European session opens, and you can see it here. It's around 2 a.m. So just really quick, okay. So you can see this 8 range chart, and the bars are nice. You got very decent, very solid volumes coming in. Now, granted, there's going to be times like here. Go back, from this is 21:04. This is Chicago time to 22:14. So you see, it took over an hour for this bar to complete here before you started the new bar. There are periods at night where there are what I call periods of illiquidity, and if you're trading, sometimes it's going to be very slow. And I mean, that's just the nature of the markets. I mean, maybe nothing going on in Asia. Maybe there's a holiday in Asia. There's just nothing going on. Then when you get into the European session, things pick up and it starts moving at decent intervals. You see bars forming in 2 or 3 minutes, basically. So it's not too fast, it's not too slow. But during the Asian session, it can be quite slow. Given a choice, would you rather trade during the Asian session or European session? If I was going to trade the Asian session, honestly, I would trade an Asian-based contract. I would trade Nikkei, has very good movement. I would trade Hang Seng, palm oil. I mean, nobody's interested in that except me. That's just because I have a contract that I traded for a very, very long time, and I sort of know it very well. But the main contracts, Nikkei, Topics, JGBs, not really, but Aussie dollars, you can trade as well. There's decent movement there. Eurocurrency you can trade, but like I said, you're going to come into these periods where there's just not much going on. And it's going to take an hour to form, especially you got a position on, right? And the last thing you want to do is be on a position, get in a position, and the market not going anywhere. That's what drives you up a wall as a trader, is the boringness of it. And it can get quite boring during the Asian session. There are times that you have good movements, like you see here. Granted, this was Sunday night, where it reopened, so you tend to get good movements because it's the first time the market's trading since Friday's close. But for things like Eurocurrency, I think it's a good contract. 1 a.m. When the European session starts, people start coming in to look at the European session. But just get really quick here. This is a great selling opportunity. People that if you have my software, you have access to my courses, you have access to my inner circle, and I talk about this type of setup right here. it's giving you a nice little move down there. What else you got here? You start going up, down, down, down. You get some decent movements, from 122, 123.38, down to 22. So there's opportunities. This is another great selling opportunity right there. Then it's just sort of going sideways, sideways, sideways. And again, you get this nice little move down. There was a terrific trade. There's a nice trade opportunity here as well. Get short. I thought that was a terrific opportunity. Getting short from the 123, 03, 04 area. It puts in a nice 20-cent move down, or 20 full ticks. It's 40 half ticks, which the Eurocurrency trades in. You sort of come down into these swing lows. I was looking at it this morning. When you got down into this area, I was looking for a reason to buy. I kind of half-hearted like this. This one, not so much. I was interested in here. I was kind of disappointed that it just went sideways here. But you know what? You had the bullish ratio right after the swing low, and you had the stacked imbalance coming in here. To me, this was like an all systems go type of trade. But then it came right back with the bearish ratio here. The imbalances, the trap trader signal right there. And unfortunately, it just went sideways. I thought this was it. We can probably trade back up above 123. We didn't. But, there was signs right in here, right in the next bar, that it wasn't going to work out. You just sort of went sideways, sideways, sideways into where we are right now. Now, okay, so this is a range-based chart. Compare it to a minute-based chart. And, just really quick here. It takes some time here with NinjaTrader to update. If you're using a minute-based chart, you get bars like this, which is, the kind of dojis, opening and closing at the same price, where it's just one price level, and you can't really make solid trading decisions off, extended periods like this, 4 or 5 bars. This was a nice, there's some nice bars in here, but it's not being consistent, right? I just prefer my bars to give me, use the information that the market's making available to you. There's a lot of information out there, and with trading, sometimes it's how you take that information and put it into an easy to read format, or a format that you could get some value out of. This swing high, on a minute-based chart is, it did give me a decent selling opportunity. It did say, hey, you could probably take a low-risk sell here, but then you just sort of run into these bars that, like this, or this. It just sort of screws up your thinking. You're like, hey, are you gonna go sideways or not? Obviously things start picking up again. You start getting the bearish ratios coming in, but that's just the trade-off that you take if you're trading a minute-based chart during that time period. If you were to go back to where is it here? So like 2 o'clock, right? This is the European session, basically the open, and that's why you get it's such a big bar. It's always going to be a struggle sometimes if you're trading markets that put in bars like this over extended periods, and then boom, you get a big bar like that. Although granted, this is because of the European Open, but if you go back here, it's like there's just nothing going on, and that's why you get these little bars like this. It's just basically one price level, basically the bid and offer trading, one price level. Honestly, it's hard to make heads or tails out of anything like that. Here you got this extended period of time where there just ain't nothing going on. How are you going to make any sort of trading decision based on volume when there's basically, you got one contract traded in this period, another one contract, 2 contracts, 3 contracts, 6. You can't. That's why I prefer to use a range-based chart, as opposed to a minute-based chart. Just because the amount of information you're going to get is much better and much cleaner, right? But there, like I said, this is the type of bar that I talk about a lot, in the inner circle. That is a great selling opportunity. You've got ratio, you got point of control, everything that you'd want in that type of bar to get short on. So that there are opportunities there. Let's take a look at another market really quick. Crude oil. Again, crude oil, I just showed you the volumes. It trades decent amounts of volume that you can get involved in at night. Now, for me personally, crude oil does trade a lot during the Asian session. Obviously trades a decent amount during the European session, but for me, where I really think the volume really picks up is, basically the 4 a.m. Chicago time, which is the old ICE opening. Now, granted, Brent trades overnight as well, but back in the old days when Brent used to open up about 4 a.m. Chicago time, that's when the volume used to really pick up. But, again, this is an 8 range chart on crude, the same type of chart that I'm using on the Eurocurrency. And you can see, you're getting some decent price movements here. They get this period going sideways during the European Open. We sell off here. Not much really as far as trading opportunities this morning in the crude oil, but I just wanted to show it to you so you can see. Now, granted, the 5 o'clock reopen, 5 o'clock Chicago time reopen. You get some bars. It's kind of illiquid. Give it some time to settle down. Granted, it was Sunday night. So it's the first time the market's reopened since Friday. But again, let's take a look now at some of these other markets. Like Eminis. Eminis is a contract that you can trade as well. Very good volume. Again, a lot of contracts I think would be very happy to have that sort of volume. Now, on why would I use a 4 range as opposed to an 8 range? Honestly, I do keep an 8 range open, and if the market is if the market has more volatility on that day, I'll stick with an 8 range. But generally, I prefer a 4 range because, where am I here? Because it's not moving so much, But again, if we're gonna, if I see volatility is high, trading a 4 range chart, by the time you get into a trade, the market's already moved, a full point, not a tick. I'm talking about points. That it's, you're missing your opportunities. And the last thing I want to be doing is trading a chart that I can't, get the decent entries in, or if I say, hey, I got to buy here, and I buy it, and we're trading 3-4 ticks higher, it's kind of pointless. That I'm going to be missing all my trades. But let's just go back to the Asian session here. So this is 8 p.m. This is the 4 range chart. So going back since going back here, what is that? 5 o'clock reopen. You can see there's decent volumes going through already. Give some time to settle down. The Asian session, things start picking up here. You got a bearish ratio here, sells off to a bullish ratio there, goes back up. This is a trap trader signal, but again, we're already moving up. I prefer these trap trader signals at swing lows or swing highs rather than at in the middle of moves. So if you see something like that on the software, I would prefer to see it at a lower area, not after, we just sort of been ticking higher like that. And we sort of come up here. What time is this? This is midnight. Yeah, I hope this video is as useful as some people. But again, I'm just sort of going through here. This type of bar I like. You got a bullish ratio, point of control at the bottom, but it comes right back with a bearish ratio. You got the imbalances in there. So, even if you're getting long there, when you see a bar like this, it's, you're going to get stopped out. You just got to sort of take that loss. Now, another thing that, again, I have what I call these ratios, right? That's what these blue numbers are. There's black numbers, there's blue numbers. And if it's a blue number above the bar, it'll be a blue number above a red candle or a blue number below a green candle for a ratio that I like. If it's a black number like this, 4.6, 2.8, 4.9, if the number is black, I'm not interested in it. It's just the normal order flow that you would see going through. But when you start seeing, blue numbers, there's two types. There's a ratio bounds high, there's a ratio bounds low. And so if it's above 28, again, on the settings, if it's above 28, then that's indicating me price rejection. If it's below 0.7, some people use 0.1, but here it's ratio bounds high, ratio bounds low. So if it's above 28, actually 30 is the number I like, but again, I use 28 because if the number comes in at say what, like 20, I don't know, say it comes in below 30 but above 28, I still want to see it. then below 0.6. So ratio bounds high indicates price rejection. Ratio bounds low indicates price support or resistance. So when you start seeing them appear, I'm bearish. When I see them below, I start to think bullish. I mean, I don't have a bias generally, but that's what I'm thinking. I'm looking for a market to start coming off. If I start seeing blue numbers above red candles, consistently, then I'm looking for the market to sell off. Now here you got a stack sell imbalance. Now again, I sort of touched on this yesterday. Take things in context of the market. Yeah, you got a stack sell imbalance, but what the market's doing, it's doing nothing. It's going nowhere. It's going sideways, and that's not a great trading opportunity, right? If you're taking stacked imbalances or imbalances, in general, be looking for breakouts rather than in the middle of an area, because it could just be a big order coming through. If you're trading sideways, and there's someone with a big order, they're happy that the market's trading sideways because they know that they could move their order, move their size order through the market without really moving the market, because the market's consolidating for whatever reason, that people are just happy to trade in that area. So sometimes big order will just come in and just power through the market, and you can get a stacked imbalance and the market can just go back to normal afterwards. That's how people with big orders think. They want to move their order without moving the market. And the other thing is, generally if I see a bearish ratio followed by a bullish ratio, it's not a trade that I'm looking to take. Like if this was just a bullish ratio like this right here, this 0.11, and there was no ratio here, if it was just a regular black number, I'd be more interested in it. But when I start seeing opposite, bearish ratio followed by bullish ratio, to me that's just sort of a market that's not really going to get much of the move that I want. Here was a bearish ratio followed by a bullish ratio, then followed by a bearish ratio. Did it sell off? Yeah, it sold off a little bit, but for the most part, it's just sort of going sideways. If I were to take this long, I would have to get out based off this. Did this one pay off? Yeah, a little bit. It went down. Not the greatest move. I just prefer to see more bearish signs to get short and bullish signs to be getting long. And I just prefer to see them sort of lined up together. Like here you have bullish, 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 but it's mixed in with, a down candle, a down candle. I'd prefer to see it coming in, without these red candles and just sort of start working our way up, not sort of spread out like that. Then we make this move higher. And it sort of takes us to where we are right now. So that's a range, that's a 4 range chart. If we were to look at a minute-based chart, just compare the minute-based chart to the range-based chart on the E-minis. Give it a sec here for NinjaTrader to work. It's like here. So you're going to get these periods where, again, if you're using order flow, you're trying to analyze what's going on in the market. And, if you're just trading one price, you can get any information off that. Where am I here? You're not going to get much. Just, you can't make any decent decisions off this, period. You can't. Nothing. Doji, 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 doji. If you want and you trade dojis, just trade dojis as opposed to trying to read the order flow like this. Normally I would like this, but this market it's not really trading very much. On a minute by minute. At this time, volume's okay, 138, 239, 315. Some markets, during the day session, that's decent. But again, it's just not really giving you very much preceding it. You're talking, some of these bars not even trading 100 contracts. If you were to go back to, even prior to the European session, if you look at the volumes, it's 60, 80, 40. Here, look at this. This is, you can't make, this is completely information that's useless. It's information, but I'd rather, that's why I prefer range-based charts, especially during the night session as opposed to minute-based charts. If you've ever traded at this time of night, around the from 10 p.m. Chicago time till about 1 a.m., this is what drives you up the freaking wall. Okay, say, hey, I'm going to get short here. Okay, you get short, and it's 10:20, 10:22. Okay, yeah, you're short at 70, call it 79 and a quarter, because you can't get your halves off, so you get short at a quarter, and it's down to 79. Okay, yeah, hey, it's going in my favor, but you're short. The time is 12:22 a.m. and you're just sitting here. Oh gosh, 10 minutes later, you're one tick into the trade. It's just going sideways. Like, this is what just drives you up the freaking wall. You're waiting for a move, and you don't. It's just taking forever for it to happen. Eventually, it does happen. You can see it moves all the way down here to 7 and a quarter, but it's excruciating. It's very excruciating, to sit through. I don't have that tolerance for it, but can you, in short, can you trade the evening session? Yeah, you can. You know what? Let's take a look at where am I? Bunds. Bunds is a great contract. I mean, DAX is a nice contract, but Bunds is it's the German 10-year note basically, and it trades very good volume. This is a minute-based chart, but range-based charts. Again, I have interest rates. I like 4 range charts. And you get some very good information, like here, right? You got this area right here. So you got this swing low here. You sort of come up a little bit, trading sideways. You get this nice imbalance. It's in an area that you've been trading. But again, if you're looking for a breakout, look for some signs of the market getting ready to break out. And obviously, you got a stacked imbalance here. If you could take out, this previous high here that you've been hitting, so you got some aggressive buying coming in. Wait for it to take out that high. Take out that high, you get a nice little move up there. But there's a beautiful setup right here. This bar, you got the bearish ratio point of control right at the top. It's one of these. Even the delta is nice, setting up nicely. But this was a great short opportunity right here. From 157.80 all the way down to 70 in the Bunds. Again, here 230. Again, so this is sometimes you do get moves, and if you're trading a range-based charts, you sometimes think that you get some time in between, but obviously this number probably came out here at 230. I don't know what number it was. Caused this move, this quick 3-bar sell-off, before it rebounded up. But here 150 in the morning. Cash in the Bunds is 2 a.m. I mean, the futures open at 1 a.m. But this is another great opportunity right here based on the order flow. Boom. And it's the bearish ratio that you like, and it sold off quite nicely as well. So Bunds is a great contract. Bunds is a great contract to trade. Margin is like 1,000 euros or something. 1 euro is 10 euro. 1 tick is 10 euros. So if you can grab 10 ticks out of it, it's 100 euros right there. So there are nice opportunities to be had in the European markets as well. But I won't get into it. This video is starting to run a bit long. So thanks for watching this. You go to my website, Orderflows, if you want to learn more about order flows. And again, it's one of those things is don't feel that the only time you can trade is during the U.S. day session. There are opportunities throughout, I'll say throughout the nighttime, but throughout the day. The trading day is basically 23 hours more or less. That and there are other markets around the world that are good to trade, that give plenty of opportunity. I didn't show the Simex Nikkei. Maybe tomorrow I'll do one on, or tonight I'll do one on the Nikkei. But there are some very nice trading opportunities to be had in markets around the world. Not just the U.S. markets, but there are some markets in the U.S. Eurocurrency, crude oil, and E-minis and bonds to a certain extent that you can trade during the night session with decent liquidity. So thanks everyone, and have a great day. Bye-bye.